Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Dryden Gold, an exploration company focused on the discovery of high-grade gold mineralization. Trey Wasser, it is great to have you back on the show for another conversation. We're going to dive into a lot today, so I'm very excited.
Yeah, me too. It's just an incredible market out there, and everybody's excited. So I'm anxious to get started here.
Well, last time I had you on the show, which was just a couple months ago, we talked about several fundamental changes that were fueling the current rise in gold prices. You talked about Fed rate cuts potentially having a meaningful impact. We did see a 25 basis point cut with more rate cuts looking like they're going to be ahead. We talked about crypto companies entering the gold space, Basel III and bank implications for gold, as well as the recent M&A activity in gold stocks. So a lot of activity across all these fronts to discuss. And given that gold has already broken to new all-time highs and the gold sector in terms of the mining stocks is soaring, let's revisit. Gold and silver are now some of the best performing assets in 2025, vastly outperforming the broad market, yet not a lot of people talking about this in the mainstream press. Is it time to be taking cyclical profits here, or do you see a long-term secular trend? Because some technical analysts will point out, for example, that gold is overbought by quite a lot at these levels by RSI and some other indicators. What are your thoughts there?
Well, I think you've hit the nail on the head, and this is a theme that I've been starting to work on, and it really, if we look back and it was hard to explain where a lot of the historical fundamental drivers for the gold price, and certainly interest rates being a key one, was why was gold going up the last 2 years as much as it was when interest rates were actually going up, or certainly not going down. And so, with everything that's going on, I really think that looking at this as a cyclical uh, commodity type of move is just not right. I think we are in a secular trend, that there are many things going on, and I've got a list here. I don't know, I don't know if we can cover them all, really, but the traditional cyclical things, the central bank buying, of course, and we hear that, and you get the numbers, and the interest rates certainly always going to be a key, and whether we're in inflation, deflation, stagflation. One thing I like, I listened to your Jim Rickards interview the other day, and he likes the everything hedge example of gold, and that probably fits the best into my secular theme. But when you look at the secular things, I mean, another thing that you talk about a lot with on your show with guests is the BRICS, the de-dollarization, the geopolitics that's involved with BRICS, and of course, it's that's and that's something that's secular. That's not just something that's going away. It's a trend that's going to continue. I'm not saying the dollar is going to, crash, but de-dollarization caused by geopolitics and trade issues now with Trump is very real and long term. Uh, we talked about before with the changes with Basel III, and now the U.S. banks getting very involved in the gold market for the first time, and some of these banks, that were the bullion banks that were shorting gold. Of course, we have the crypto thing and the tokenization that we're starting to see of not just of assets in general. And I think this is a big, again, secular theme. This is something that's going to go on, and we're going to see the way that securities and assets are traded. It's going to go on the blockchain. I mean, most of us don't understand how blockchain works and what it does, but it's coming, and it's very real. We have this the debt, and some talk about the U.S. debt as the spiraling debt crisis, and it certainly is, and it doesn't seem like there's any real interest in the U.S. of changing the spending habits. Poor Elon Musk. I mean, he exposes some incredible waste in the government, and he's attacked, and his cars are bombed, and his dealerships. It's crazy, out there, and that, I guess, that's the other secular thing, is we're looking at so much geopolitical unrest. Talk about it relating to the BRICS, but also, it's very civil. It's at home here now in the U.S. Very, very much so. Trump going into, the National Guard going in and cleaning up some of these cities, and some of them not even wanting help. And of course, that they compare it to some, make some horrible comparisons. It ends up with a true American hero in Charlie Kirk being assassinated. And, again, this is something that is more secular. I don't think this is something that's just going away and going to be solved quickly. So a lot of things, and every one of those things is pointing towards higher gold prices.
Yeah, that's a lot to unpack, but I want to start with the Fed and the banks, because it seems like the Fed and Trump are really at odds. The Supreme Court now getting involved. Of course, Trump very outspoken about rates being too high, making up his nickname for Powell of too late, constantly pressuring him on social media to lower rates. We don't even know what's going on behind the scenes as well. Plus, weak labor markets are fueling the fire for the Fed to continue lowering rates. How do you see this all playing out ahead, and what could its implications be for the gold market?
Well, look, ultimately, you mean Trump. There's just no question he's the disruptor in chief. You can disagree and disagree on some of the things and his methods. I mean, he's certainly going to get his way, because he replaces Powell at the first of the year anyway. So, but in the meanwhile, he is putting pressure on. It's not like he's the first president who's ever pressured the Fed. And, meddling with the Fed, I'm not sure the Fed actually does a very good job. Again, responsible for managing just a huge debt load here that they've laid on the country. You would think they would want lower interest rates just because of the interest costs and the impact that it's having on the balance sheets and on the Treasury. But you meddling with the Fed, it is probably warranted. I mean, they're following data that obviously is flawed, and bad data that they're getting on the labor markets for sure. And of course, Trump had enough of that, so he fired the people who were, putting out the bad data. I think the inflation, their mandate is to follow two things: the labor market, and they say they're data driven, but the data they get for labor, and have gotten for the last 4 years from the Biden administration, was clearly false. I mean, all those jobs have been revised away. And inflation data, you can say what you will about it, but I mean, I think we all know that their numbers don't really reflect what it costs to, run a household. So I think that meddling is something we're just going to, continue to see. He'll get his way, and they may lower rates. I don't know. I don't know how much. I don't know. I'm not making economic predictions here for the U.S., but I think it's certainly entertaining.
Yeah, that's for sure. Now, the banks are also raising their price targets for gold with some very bold predictions, and recommending much larger portfolio allocations to gold. There's talk out there now of the 60-20-20 portfolio: 60% stocks, 20% bonds, and 20% gold. I forget which financial institution said that. Maybe you could bring us up to speed on that. But US banks taking such a bullish position on gold. This is very interesting, because several of these same banks, as you pointed out at the beginning of the discussion, were recently known to be shorting gold. So help us make sense of this whole situation. It seems like when it comes to institutional investment and the mainstream Wall Street professionals, things are starting to turn in favor of actually recommending gold. Is that how you see things playing out?
Well, exactly. I think, and certainly I think that there maybe has been a bit of front running, but, we last year, we thought that Bank of America, when I think gold was at 3,000 or just below 3,000, and they put out a target of 4,000, and everybody thought that was, a very bold target. And here we're, just finish up the third quarter, and they're having to raise that to 4,500. And of course, I think Goldman's at 5,000, and as you pointed out, across the board, and many of these are. So, one thing that tells me is that certainly with putting out these targets and now raising them, and the number of banks, I think you're seeing. I think they've been squeezed out, and I think part of this rise in gold has been a short squeeze out of those paper contracts and a settling of the books. We haven't seen that on their financials yet, but maybe this quarter. I wouldn't surprise me if this quarter we did start to see some write downs, or losses attributed to metals trading. You pointed out the huge news there. It was from Mike Wilson, who's a widely respected analyst at Morgan Stanley, coming out and changing the age-old adage of 60 stocks, 40 bonds, which to 60 stocks, 20 bonds, and 20 gold. And if you read the article, he's pretty negative on the bond side, of this, that they're not providing the kind of hedge that you need longer term, as the purchasing power of the dollar is dropping. So the interest rate you're getting, whether it's rates are higher, or even if you have 6-7% that you're making on bonds, they're not keeping pace. And meanwhile, I think if you look at gold, I want to say even the last 5 to 10 years, on a 5-year basis and a 10-year basis, it's right around between 10 and 11% a year has been the return. So again, I think that's huge news. Another thing that I'll bring up too that is that some of the banks have now announced this in the past couple of weeks, that they're now accepting gold for margin accounts as collateral. That's very big. With hedge funds that would normally, be rotating out of their gold positions to get into other assets, no longer have to do that. If they want to move to oil or stocks or whatever, they can use their gold. So, all in all, I think, with the allocation, we don't have any evidence yet of if the Basel III, which made gold not just a tier 1 asset, but a liquid tier 1 asset, so that it could be used in their reserves along with their treasury bonds for their reserve requirements at the Fed. I don't have any evidence yet that they've done that, but I don't see how the bank like Morgan Stanley can be recommending a 20% allocation to gold and not be putting, using it in their own reserve account alongside the bonds. Look, if you look at what he's just recommended, he's saying take half of your bond money and put it into gold. If they did that, that's about $100 billion worth of gold have to be bought. So again, one of those secular things that, it's not going away next year. It's fool's errand, I think, to be even making projections for how high you think gold could go.
Well, last time you also predicted we'd see increased activity in the move crypto companies are making into the gold space. We now have Elemental Atlas merging with EMX to form a larger gold-focused royalty company, all backed by Tether. We had also spoke about the future of tokenized gold, and one of the leaders in that field, StreamX, has recently entered into a letter of intent with Simplify Asset Management to, quote, advance regulated ETFs incorporating tokenized assets, beginning with our yield-bearing tokenized gold. Your thoughts on how blockchain and tokenized assets will affect the gold market moving forward?
Probably the most powerful part of my secular thesis is this tokenization. Assets, the way that we trade all assets is changing. And while, I'll be the first to admit, I don't understand how the blockchain works, it works. And it's a big market. when you look at the stable coin market, for example, now up to 300 billion, supposed to grow to a trillion by 2030. And that market, it's not me. I don't need a stable coin. I have a credit card. I pay it off every month. I make money on their float, on their money. I have a checking account, and I don't need to put my money in stable coins unless I want to send it to somebody over in Africa who doesn't have a bank account. But most of the users of the stable coins and of tokenized assets like that are in Latin America and Africa and Asia, places where they are unbanked, and they need that. So if you look at the number of people, it's over 500 million people worldwide now that are using digital assets of some type or another. Some of us by being invested in Bitcoin, but the bulk of it is being traded on a daily basis for making payments through stable coins. So Tether. I ran into the guys, some of the Tether guys at Beaver Creek a couple weeks ago, and just very excited about this whole royalty model. Like they just discovered it or something. So I think that again, I think there's much bigger things ahead. StreamX is the same thing. Of course, it's backed by now Frank Giustra and Sean Rosen, some stalwart investors in the and pretty smart guys in the gold space. Their tokenized asset and that they're paying interest on. I mean, it has to do with them actually leasing out the gold. So I'm not sure that qualifies as having the physical gold if you're leasing it out to a third party and taking that third party risk. So I'm not sure how that'll fly, but I think if you look at what Tether does, I mean, they have $150 billion in their stable coin. They get to invest it all into U.S. Treasuries, or have to. So they make about plus or minus 4% interest on $150 billion with basically no overhead. It's like the perfect float. It's like having a $150 billion checking account that you don't pay interest on, but get to invest that money. So we're just going to see more of it. And if you look, like I said, looking at those numbers of 500 million people using digital assets and tokenization, more of that, I think, is going to go to gold. I don't think Tether is amassing physical gold that they're putting into a vault in Switzerland. They've got their own vault, I believe, and buying up royalties and streams with the idea that they're not going to sometimes at some point tokenize those streams and royalties. Of course they are. How it's going to happen, and I mean, or could they overnight convert all or part of their? Because they do have a stable coin backed by gold as well. It's called XAUT, and it's only about $1 billion market cap right now compared to their U.S. dollar stable coin, which is 150 billion. But they could move people from one to the other. I think, I don't think the people in Africa care if they're in a gold-backed stablecoin or a U.S. dollar-backed stablecoin, as long as it's backed by something real, and maybe the gold is even more real. So it's coming, Jesse. It's coming, and I think it's going to be big. And if you look at the size of the markets there, the daily trading in the gold market is 7 times the size of all crypto trading today. So, you start to apply the 500 million users into a market that, there's much more trading in. It's going to get very interesting.
Yeah, I think so as well. Not a lot of people are talking about it. Yourself and Peter Schiff is the only other guest recently that comes to mind that has spoken about tokenized gold and the potential future for that. Definitely a development to keep following. And another development, of course, we're following is Dryden Gold. So what is the latest news coming out of the company right now, year to date, that investors should be focused on?
Well, we just in August completed a $7.8 million financing. In fact, just yesterday, we finished the last drill hole on our 2025 drill campaign, which was 15 total, right around 15,000 meters. And so we've got a very robust strategy for exploring our property, which is, as you know, very large. It's a 70,000 hectares. It's a district scale play. We're focused 50% and the majority of our efforts so far on the Gold Rock Camp, which is the Archean lode gold system, very high grades. But we're also spreading doing some work over on our Hinman project, which is a lower grade bulk tonnage target, but very large potential, and down at Sheridan, which is also would be a bulk tonnage target. So we've got a lot going on. With the funding we did in August, we've got our about a 23,000 meter program planned for 2026, which will actually start next month. We always start our program, the 2025 program actually started fall of 24. So, and of the 25 program, we've probably got about 7,000 meters of that 15,000 are still either in the lab or in the yard and being cut and get to the lab. And so we've got a lot of news yet to come out of that program. And now we're fully funded to just keep drilling. And of course, we can drill year round up there. So other than maybe taking a bit of a break around December, Christmas time, which we usually do, we'll just keep those drill rigs turning.
I want to dive into the details of your 2026 drill program in just a moment here. But first, I want to talk about some of the shareholders, the significant major shareholders in Dryden, including Sprott Asset Management, Eric Sprott personally, and two other gold companies, Centerra Gold and Alamos Gold, having particularly large stakes in Dryden. So talk to us about the importance of this high-level shareholder base, and are there plans to attract more institutional investment into the company moving forward?
Well, look, I think the answer to the last part of your question there is we pretty much are, probably about 80% between management and institutional ownership at this point. If you consider Eric Sprott, Rob McEwen, and Bob Quartermain, as institutions, which they are in their own right. But, we are very proud of our shareholder list. I mean, our largest shareholder, outside of Centerra and Alamos. Alamos, our largest shareholder, a little over 12%. Centerra is maintaining a 9.9% position, but then Delbrook Capital is now up to about 9%. Peter Schiff's Europac Gold Fund has about a 6% position. And so, we have a lot of other, institutions involved in the company. U.S. Frank Holmes's U.S. Global Fund is involved. So, we've done a very good job of attracting those funds. I think, our goal for next year will be to do more marketing in the U.S. and start to add some of the U.S. funds. And, we're really starting to see some interest down here in the U.S. from the family offices and stuff in the gold space. And, I'll point out that, I'm often asked by people when I go to, especially these retail gold shows. We were just at the Metals Investment Forum in Vancouver this last week. And, I'll have people come up to me and ask, they're looking around the room at 40 different companies and say, how do I tell the difference here? And I said, well, one thing you can look at very quickly is, what does the shareholder list look like? Who has put money into the company? And that's one thing with Dryden from the very beginning. We focused on not just being able to raise money, but who we raise that money from. There's a phenomena going on in the gold stocks, and it maybe adds to back to my secular theme of something that's different this time. Is the major and mid-tier gold producers who typically would start doing some really dumb stuff when gold prices would go up this much. Instead, they're doing all the right things. Newmont and Barrick just sold Hemlo, and Newmont shedding their non-core assets and focusing their capital allocation, very wisely, I think, to their biggest, longest term tier one mines so that their costs will actually go down over the years. Newmont laying off executives at 4,000, at $3,800 gold. Things that didn't happen before. So these companies are going to be making a lot of money. One thing that they've done in the down cycle in the tough years is they got rid of a lot of their early stage exploration, not only the projects, the properties, but the teams. So they're a little long in the tooth on the exploration side. You look at the companies that say Centerra has invested in besides Dryden, uh, the Zach Floods, Kenorland, some of the sharpest younger geologists in the field, Caleb Stroud's Headwater down in Nevada, again, a much younger group. And so Centerra is focused, not only on what they think are very good projects, but good young teams because they don't have that talent. And I'll tell you that I think Dryden probably has the youngest geological team in the industry. I challenge anybody to come up. Maura Kolbe, our president, who she's the senior there at 40 years old. I think our average age probably is in the low 30s, and it's a lot of smart young people, actually mostly smart young women who are, for the first time, being given a chance to really build something and do things their way in an environment where their ideas mean something. A lot of these young people have, we hired a new exploration geologist from El Dorado, and I think he was much more stifled by the older geologists who told him how to think and how it should look and how to write it up, and didn't give him the autonomy that is really making him blossom now at Dryden. So that strategic investment from Centerra and the fact that Alamos is a large shareholder and watching us very closely and giving us input. We've made the final payment to them this year, so we now own the property 100%, and they're still very much interested in following what we're doing, as well as several other companies, major and mid tiers that have met with us, have been to site, and that are following what we're doing. So it's that strategic investment and the fact that it's really given us a validation of the project and the team.
Well, let's dive into the 2026 drill program and what your plans are for that. You've mentioned that your 2026 program will be based on results from the fall of this year and will be focused on property-wide discovery. So give us some insights into what the exploration program will look like.
Well, look, that's if you look at what we have really is three major three projects that we're working on. Our flagship and our initial focus is in the Gold Rock Camp. Gold Rock Camp is 20 kilometers of strike on the Manitou to Norwalk Deformation Zone, where we've been focused, and most of the historic drilling and historic mining was done in what we call the Gold Rock target area there, which is around our patented claims. This is where the previous operator drilled 53,000 grams per ton over half a meter, and we've followed that up with some very good discoveries. What's been a breakthrough there for us is we're now seeing, we've always made the comparison to Gold Rock and Red Lake. And the more work we do there, the more it looks like Red Lake. Same rocks, same mineral types of mineral deposits, and the big thing for us this year is after we got the permits and could really start drilling up on the Elora trend there in that Gold Rock target area, we started hitting these stack structures. At first, we thought it was just a hanging wall. But then when we stepped out, we hit another one and then another one. And so we finally went all the way across, and we drilled. Our most recent press release is what we call the gap hole, because it filled in. We drilled from the Big Master system to the east all the way across to the Elora system, which is about 700 meters apart and to see just how many of these stacked structures were in there. And we found 9 structures across there. So where we started with 3 veins, well, the Big Master 1 and 2 vein and the Elora, which is more of a shear structure, we now have, instead of 3, we have 9. And we're hitting very high grade in these stacked structures, 300 grams per ton over 3.9 meters. And so we're continuing to expand this. This is about a 1 kilometer square area. And so 50% of our efforts will remain there to really kind of unwrap this, find out how we think, and we're drilling now to show we're going to drill a gap hole up further to the about halfway between half a kilometer to the north, and then we'll run all the way up. But we're filling in and going to show that these structures, we have all these structures running through here. And that's what really opened up Red Lake. They were mined down 300 meters before they started hitting these stacked structures. And they hit 10 of them, I think it was total, that had no surface expression. It shows you what a huge event this Manitou to Norwich deformation event was tectonically, in that some of these things came to surface, but most of what's going on down there has no surface expression. So that's very exciting. On top of that, like I said, in Gold Rock, we have 20 kilometers of strike. So we've already drilled some holes 2 kilometers to the north at what we call Mud Lake to show we have another one of these areas up there. And then we have a pipeline of targets that we're working on in the Gold Rock camp that'll show that we've got, a dozen different targets that look like this 1 kilometer square area. Then in parallel with that, we're working on 2 regional projects. One is down at Sheridan. That's down to the south of the property. Very good road access to both of these regional targets. In fact, you can drive a Toyota Camry into the drill rig at Sheridan and at Hinman for that matter. But at Sheridan, we've made a first pass drilling. We should have results out on that over the next couple of weeks. And while I don't have all the details yet, I can tell you they're planning another drill program down there. So I think that the results are positive. That we're trying to be careful with the market here and make sure that they realize we're doing something very regional here. This is a completely different deposit style. This is an ultramafic contact zone. It will likely be a lower grade bulk tonnage kind of target. Although we are seeing, we have seen historically some high grade ground samples there and some high grade drill samples. But we think for the most part, it's going to be a big bulk tonnage target. And then over at Hinman, we've been doing channel sampling this year, and we've done that through a third party. So we didn't do that work ourselves. But that's also a very big different deposit style. This is granodiorite with quartz stock work veinlets in it, very similar to the Goldland deposit up at that Next Gold has. It's about 10 kilometers to the north. It's a much bigger footprint. Goldland has about 1 million ounces in it, in a footprint that's about 150 meters by 600 meters. The pit there that they've outlined. And at Hinman, we've got, instead of 600 meters, we've got 5 or 6 kilometers. So something that could get very, very big. The channel samples are just coming in, so that'll probably be our next press release. And again, we'll likely be putting, from what I've initially heard about the samples coming in, that we're talking about peeling out some budget for some drilling this fall at Hinman. So 2 very exciting regional targets. Again, different. The market needs to know when we put out Hinman or Sheridan results, don't be looking for 300 grams per ton over 3.9 meters, but those wide, intercepts that would outline bulk tonnage.
Well, no shortage of catalysts and exciting news flow coming up for the company. As always, I'll end by opening the floor to you. Is there anything top of mind at the moment, anything we didn't cover or you think is important to emphasize about Dryden Gold to potential shareholders?
Well, look, I think with Dryden Gold, we just a lot of news coming out. We're fully funded, so we'll be drilling well into next year. We do have 38 million warrants from the RTO that are now in the money. So we're working to get those exercised. That would increase the treasury by about another $13 million. So we'd be well funded with that without further dilution. So we're we've got a lot of news, not a lot of news flow coming, and it's a very exciting area that we're working in, and I think people are going to be very happy who are invested in our stock, and then I'll just also say on the gold market is this is secular, baby. I'm not calling for a top in this market for the foreseeable future. That's for sure.
I completely agree with you there. I'm going to put a link in the description to the Dryden Gold website as well as social media so people can follow along with the company. As always, Trey, greatly enjoyed the conversation. You shared some awesome insights today.
Thanks, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.